Yo, ladies and gentlemen, welcome back to the channel. We are in there like swimwear live, back in action, ready to go, kick ass and take names. You guys know the deal. It is that time. It is that time. Did Tesla save the stock market? That's the main question. Is everything saved? We're gonna have to see. We got the Fed in the morning. I don't know. Did Tesla save the stock market? Earnings were great. I mean, there was really nothing negative you could pull out of Tesla earnings.
Mom.
Yeah, we got Ling Ling starring the infamous Ling-a-Ling. And Ling-a-Ling is doing her Ling-a-Ling usual things, disrupting the live stream. Hey, we have Tesla to go over, okay? We have stock market live action to cover, okay? Okay? Is that okay with you? All right. All right. Give me my keys. Thank you. Thank you. Go get a bite. Fruit snack. No candy. Man. How is it going, ladies and gentlemen? We are in there like swimwear. Hold up. Let me pull up the chat. See who is joining us on this beautiful night. Mr. Simon, Super Show, Christopher Bate, Dan the Man, Jennifer Hendricks, Cheese Chaser. No, we need to riot. Super Show, it's your birthday. Oh, man. Come on, Ling. Let's go. Come on, Ling. Look. Go get a bite. Go get a bite. Look. Bite. Oh, yeah. Bite. Go get a bite.
Hey, baby.
Look. You wear this one? There you go. Your Uncle Sam. Coming to take all our tax dollars. Tesla puts went crazy. Did you have the Tesla puts?
Mama.
Yeah, anybody that had Tesla put or Netflix puts. I meant. No sugar for you, thank you. Thought I'd stop by. It's 3 a.m. My work's done for the night. Oh yeah, you're in the UK, huh? We love our UK brothers over there and sisters. Okay, Elaine, whatever you want. Whatever you want. Yeah, but Tesla puts were stupid. I mean, Tesla. Or Netflix. I keep saying Tesla, but Netflix. Them buggers. Yeah, $31 into 1,800. That's fire. That is fire. You bullish on oil? Yes and no. I mean, it's oil is really like what do you call it, like cyclical, like it comes and goes, because supply will always catch up with demand in the longer term sense, but here in the short term you really can't be bearish on oil, especially if a whole year up oil embargo does come. So I think oil does go higher here in the next 6 months, but it doesn't seem like much of that is actually priced in at this point. So there could be some money to be made. Hey, which way stocks going today? Well, it looks like up from futures, what that's telling us. NASDAQ up 0.78%. The bond yields are actually up as well. So investors are selling off bonds. So it's not a very stable move you're seeing here in the futures market. You would want to see the bonds. Come on, Ling. Come on, Ling. you would want to see bonds, bond yields going down, and that would look like a much more stable rally here. But we got the Fed in the morning. That's probably what is affecting the bonds. This move in futures is really because of Tesla earnings, and that's basically it. I did pretty good with the next Netflix puts. Oh yeah, interested in how the Tesla calls will do tomorrow. Yeah, Tesla is one of those where it's known for running more, not right after earnings, but like the day following earnings. So the report overall was pretty muted. I think a lot of people expected a bigger potential rally or a drop. They were pretty flat on the day overall. Like where they closed, they closed down almost $51. They recovered $54 in after hours. So it kind of just recovered the move that we, it puts us really at the open of today. So we'll see which direction it takes. Likely, if the Fed is not ultra bearish, if it's not anything else that we have not seen or heard before, you'll probably get that continuation to Tesla. It would not surprise me to see the stock up 10 or 15% tomorrow, or even down 5 or 10% if the Fed's negative. Like the earnings were really good, but it was not like knock your socks off. Does that make sense? You didn't get any of the split news. You didn't get anything about Twitter, which could have been seen more than likely as a negative. You really didn't get anything too crazy. Elon talks a lot, right? Talks a big game, and I'm a fan of Elon, and I can sit here and say that. Talking about the robo-taxi network, how that should be bigger than the car business. They plan to do like mass production of the robo-taxi vehicles by 2024. So in like Elon terms, that's like 2028. So it wasn't anything you can like say, wow, that is game changer. But they had good revenue. The deliveries, nothing new. We've known those were going to be the same pretty much. They did say expect less deliveries for Q2, but not in a substantial way. It's definitely not like Netflix. Still reaffirmed guidance of 50% growth. Said possibly 60%, but more so expecting 50%. So it was really good. I mean, Tesla had a lot to prove. Like, they have a 200 price to earnings ratio. Facebook has a 14. It's the levels of growth that are expected and why people are willing to pay for Teslas, because they set high bars and they reach those fuckers. Like every time. What's up, Ugans? Planning on purchasing some calls tomorrow for AMC. If you're buying calls and what we could be looking at, I have an idea of what I'm going to do, but would like some advice. Well, it's not technically advice. What I would do, personally, is get time on them, because what we're looking at right now is the earnings picture, which it's hard to be bullish on it. It's hard to be bullish on it, especially when these companies have had great earnings over the last 2 years. Eventually, the music will stop, and I think it's more than likely either this quarter, but really next quarter, the music will stop per se. I want to get time. You have a lot of earnings next week, so that's going to be the real wild card there. If really Apple earnings are good, Amazon earnings are good, you're going to be fine, more than likely, buying calls here at these prices. But if those earnings are bad, things are not going to be so good, and specifically, I'm worried for Apple. Let's actually do some DD on Apple real quick. And this Google Trends is your friend, okay? Right? This is one of my favorite things I like to do. Just simple iPhone. Let's see where things are at. So, like what I was saying, right? And what I have been saying, that over the past, let's pull this out. Let's do last 5 years. Yeah, like And they do spike when they bring out new products, but they've been pretty elevated in the past 2 years. Yeah, it's stayed up a lot in the past 2 years. Searches for Apple. And they are kind of in the gutter right now, but Apple's one I'm a little concerned about because they control 7% of the S&P. I believe it's like 10% of the NASDAQ. It's a lot. So if they butcher earnings, you're talking a big wake-up call for the whole markets. And what worries me the most is that nobody expects it, right? You talk to analysts, you hear analysts speak, and they're bullish on earnings. And I can see why, right? But the markets demand a certain expectation right now. That's why Netflix got chopped 36% because it was not what the markets expected, and even slightly worse, and things are not good. But I'm bullish on HD for earnings. Yeah, Home Depot has fallen a lot, but HD is they're going to be hit by the home building stuff, by construction slowing down, home builders. I believe it was like new contracts were down like 30-40% in the past year. Some figure like that. It's pretty high. So Home Depot is hurt on that aspect. If we get positive data, then it'll be good, but that's going to be the main negative factor for HD. But I'm right there with you. I do like HD for the long term, or something. Even maybe a trade. If they prove good numbers, then that'll be good. Yeah, Fed speaking tomorrow, though, right? Gonna tank. It's not guaranteed to tank, but if you look at like the Fed rate monitor tool, which I highly suggest you guys watch this too. We have 1 week, 6 days, 15 hours, and 44 minutes away. They are oddly specific. We do have that Fed rate decision May 4th, 2022, obviously at 2 p.m. Right? The markets are expecting with a 97.1% probability of getting a 0.5% rate hike. The markets firmly expect that right now. So if Fed Jerome Powell comes out and says, yeah, we're going to give you a 0.5% rate hike, I'm not sure how much the markets are actually expecting it. Like firms, hedge funds, people that have a lot of money. I don't know if that's programmed into the algorithms to sell off stocks if we get a 0.5% rate hike, or if it's confirmed, right? They have certain words that can be programmed into algorithms, but yeah, nonetheless, depending on what the Fed says tomorrow, really the balance sheet is going to be the most important thing. But if they're going to confirm that 0.5% rate hike, the Fed is going to do it tomorrow. So, yeah, that's going to be the key. That's going to be the key. Odds are you probably do get some weakness, though. Yeah, and Fed Powell speaks twice. He speaks at like 8 in the morning, and then he speaks at like 11. So by the time we realistically wake up, this picture could look way different. Like we seen last night, the futures were down like 1% on the NASDAQ, and we actually were positive to start off the day. And then things did obviously flip. What did we close at? Yeah, down 1.22%. Like it's a total flip flop right now. But hey, damn cats. Got a nice sell on Netflix today and more AMC to add to the pile of plenty. There you go. Does anybody know what's going on with Fidelity and AMC having problems trading it on Fidelity? I'm just not a fan of Fidelity. I've never used them. I'm just not a huge fan. I like TD Ameritrade, E-Trade Pro, or Thinkorswim's good too for mobile, but I need to let the volatility calm down before I take this portfolio over there, the Robinhood. And I planned to a while ago. I actually should have, like 6 months ago, before the volatility actually hit. Now it's like I have so many open positions and stuff like that. I just don't. But I'm not a fan of Fidelity. I have no idea what's going on with that. It doesn't surprise me, though. I figure if they're stable on their earnings, that will be a gem in the rough of the markets right now. Hilariously. Yeah. We do have Snapchat tomorrow. So that's going to be a very important. Snapchat. Oddly is important for stocks like Facebook too. So what I'll look to do, and not financial advice, I think Facebook is in a real bad situation after, especially what happened with Netflix. That's why the stock was down 7+% today. Facebook specifically, right? Netflix and Facebook, they both got chopped last earnings season. Now, if Facebook loses subscribers, which they likely will, people are going to start questioning if growth is done at Facebook. And that's what people are talking about for Netflix. So that's really the main driver of this Netflix drop. It's not necessarily that Netflix lost 2 million subscribers. Like, yes, it is. That doesn't help. But it's more so the fact of everybody is able to get Netflix in America and Europe. The only places to expand are really like India, right? Even China, I believe, or they might not allow it. Doesn't matter. There's already a lot of penetration. So the ending of growth is the real concern here. And if Facebook loses subscribers again and is losing a lot of money on the Metaverse, and we know that's going to be like 5 years before they can even attempt to make a substantial amount of money on that, investors are not going to wait for that. So I think that could be another good trade personally. But Snapchat tomorrow. Snapchat will likely benefit off of Facebook's demise. Snapchat grew subscribers last quarter, and they did actually make their first profit last quarter. So that's going to be a good one. That's going to be a good one. But I definitely want to get more time with that. Maybe like the May 20th or even the May 6th might be better there. What's up with Mullen going down to 120-ish, back up over 2, now shorts covering, thoughts? I believe Mullen, I didn't see if there was news or not, but I believe Mullen is reacting off of Tesla earnings. A lot of people are saying that just legacy companies are way behind EV companies right now. Because I don't recall seeing any news today or anything too crazy. Yeah. Maybe there was news, though, but I don't know. Mullen's one of those things where I just buy and hold it. Sitting with it, I have a big profit. I've made my whole position free with covered calls. So I'm not in a rush. I don't use Fidelity. Just wondered. Not planning on using Fidelity either. Yeah, I don't blame you. I don't know what's really going on with it though. The algo, I definitely recommend using it at least 2 brokers in case things go tits up during MOS. Yeah, I have Webull, E-Trade, Public, and Robinhood. So I have quite a few of them. I like using multiple different brokers. They're all good for their own things. Like E-Trade, Thinkorswim, like you get the best fills on that. You have to pay 65 cents per option contract, but it saves you much more money than 65 cents a contract. I will pay that all day if you give me a $10 better fill than Robinhood will, But growth is definitely done for both. Yeah. So that's the thing. Even if like Facebook is trading at like a 14 PE right now, if growth is done and they will continuously lose money, then what do you value them as? Maybe a value stock? And what do those trade at? Like 3 to 5 price to earnings? So in that case, if Facebook does show negative subscriber growth and that they are spending a lot more money on the metaverse, and who knows, maybe ad rates are down. I mean, YouTube's, they're decent. They're not really any different from what they were, but there was a huge dip, like a record dip in ad rates from January to mid-February, and that has me a little bit concerned for Snapchat, but we'll see. But for Facebook, they do report next Wednesday. So what I'll look to do is likely tomorrow, if we do see a bounce, then I'll likely try to play the call side, make a contract free. Maybe the 237s, I might just make them free, sell out. I'm not really a big fan of the Facebook calls right now, but or even the April 29th. Try to make some puts free if we do get a red day tomorrow because of the Fed. That's exactly what I did with Tesla today. Granted, I should have sold out, but let me give you guys a little gem here, right? So made a lot of trades on Tesla today. These fuckers, this was the most degenerate trade ever, and it actually hit. Just some degenerate ass shit. Look at it. It was basically betting by next week Tesla would go under 550 or at least under 600. Degenerate as hell. The stock would have to drop like 35%. But it had a max gain of like 25 grand off of $50. So it was definitely worth it on risk to reward. But that thing did 300% by the end of the day. Good thing I did make those free about 5 minutes left of trading, because they're probably going to get a little bit clapped. But yeah, here's a little secret you guys can do. It's not really a secret, but it's very important right now where we currently sit. So right, you got these Tesla $800 puts that are free. Made those free. They went up 435% today alone. Bought them at 128, closed at 685. So that was a fat bag, right? You go to the option chain and you just do a debit spread on it. It's basically called a ghetto spread, or legging into a vertical spread, whatever word you want to use for it. But you know, I bought them for 128. They had a massive profit. I said, hey, you know, maybe I want to get a little gambly. You know, maybe Tesla will drop a lot. So I sold the 700s, right? So I got a max profit of 10,000 per contract. I sold the 2, right? So, and collected all of my money back plus some profits, 291. I believe I collected like $200 a piece for these. So collected some profits off of already free contracts and still gave myself 20 grand if shit hit the fan. Now tomorrow, it might not. It might. Really depends on the Fed, but have another week on those. So I think it's going to be good. But that's something you guys can do, is especially if you don't have day trades available. Like if you didn't have a day trade available, and you did this trade and you hit Tesla puts 128 into 685, you want to secure some of that profit. And this is the way to do that. You can sell a contract further down on the put side, further out the money that is not as expensive as the one you own, and your risk is gone there. But you limit your potential gain on it. That's the only bad part. And that's what literally got my account to 25K. Well, over 25K was that. Little golden nugget there. The algos won't let Apple fall too much. I mean, you're probably right, but it's I think it's really like this growth concern that we're gonna start to see, and that's where some of these other stocks could benefit. Like if Snapchat is growing a lot, or Fubo is growing a lot, or SoFi or AMC, even these stocks, DraftKings, that are growing, you might start to get some capital going away from these large cap stocks into some of those more growth names that can actually grow. So Yeah, I mean, I kind of think you're correct on that. But what Apple likes to do, these shysters, like Apple, if there is weakness in one segment of their business, which there is usually not, but if you look back in history, any time that really Apple has fallen, they usually don't fall too much, because what they like to do is they like to try to offset it. So during the last 2 years, they just never gave guidance. So if Wall Street was expecting one thing, and numbers came out, they just didn't give guidance. So nobody really knew what to expect for the next quarter. It's hard to hold them to an expectation if you don't know what to expect, right? And that's what you could see this time around. Like, even if Apple has bad earnings, the thing that's kind of concerning trying to trade the downside is, like, they're probably just going to come out and say, yeah, we're developing EV vehicles. Yeah, we're going to do a phone subscription model that's already looking positive, right? They'll try to come out with different things to offset that, or buybacks. I mean, Apple has an incredible amount of money. So that's really the tough thing, where I think Apple is more insulated than other companies. If they have bad numbers, they'll just do buybacks or boost their dividend. Like, that's kind of the tough part with that one. Let me send you that Moomoo link for some free shares. Oh yeah, I got Moomoo too. I think the Ukraine situation helped Snap for Q1. With like, explain that a little bit more if you could. I didn't, I guess I'm not familiar of that. I could see how it probably did, though. People like posting on there or something. Snapchat, I just see it used by people I know, like younger people. They don't use Facebook. They use Snapchat. Very rarely. My sister, she's 16. So I'm like I directly ask her, like, do your friends use Facebook? Do you, like, she uses Facebook sometimes, but not anywhere close to Snapchat. This kid is always on Snapchat. Everyone she knows is on Snapchat, and not on Facebook. And that's where the real money is. That's what Wall Street has not picked up on, in my personal opinion. So I do own it for the long term. I got like 5K into it. Time will tell. Heroic. New NSCC rules to screw retail. NSCC 2022-03808. I mean, that wouldn't surprise me. I don't really think there's much that they can do when it comes down to the actual short squeeze. It's like Ernie Armas says, shorts are screwed. That's kind of just how it is, right? They're just screwed already. In due time. I mean, you'll need some kind of catalyst or something to like get us there, but it's definitely gonna happen. But yeah, for tomorrow, Snapchat earnings, you have AT&T, Nucor. That's one that has really been making some moves lately. You have American Airlines as well. And then on Friday, it's kind of a muted day. Cliffs, Verizon, American Express, SAP, nothing too crazy. Next week is the holy grail of earnings, though. And that's going to be key. A lot of these stocks got chopped last earnings season. Facebook, PayPal, they got chopped last earnings season. Roku, they got chopped last earnings season. So there's either going to be a lot of redemption or a lot more pain. Specifically, Facebook, I'm not so bullish on. PayPal, I'm actually very bullish on, given where it's currently at right now, under $100. I actually bought what did I buy today? I think I bought a 110 call. They were just so cheap. Like, so cheap. These things got destroyed today. Down 51%. Oh, and it actually closed down. Wow, this thing was up like 20% at one point. That's surprising. Yeah, so I think PayPal could do some serious redemption here. next earnings season. I do own like, I mean, I had like $6 grand in PayPal, but not anymore. But this is gonna be a real big key. Like, it's under its March 2020 lows. PayPal's issue though is they have a real margin problem. Their margins have been going down, but they do have that deal with Amazon coming up for Venmo. So I do think they will likely do well, but Facebook chopping block. I mean, Teladoc, that's kind of right there with it. Apple, I think, will do bad, but they might try to offset it. Amazon will likely do bad as well. Inflation has not been too friendly to them. Twitter, that's really all about Elon. Roku, I don't really have an opinion on that one. Robinhood, you could actually make a bullish case, believe it or not, for Robinhood right now at these prices, if that's something you guys are interested in trading. I probably won't trade it just because I don't feel right buying calls on Robinhood unless it was like a day trade or something. But yeah, it's just gonna be exciting. Tomorrow we got the Fed, young Jerome Powell in the building. Any trades you guys are looking at specifically? Let's take a look at good old Snapchat. Let's see. Snapchat has the ability to move like nobody's business. This stock is insane. It's a behemoth. Like, you get chopped Q4 earnings. These earnings back here just destroyed. I believe that was Q3. Was that Q3 earnings? Down 26.5%. You actually made a profit last earnings, and the stock was down 23% in regular trading. Next day up 58%, and now you're at a very key level. We'll just call it that. But this thing can move. This thing can move quite a bit, and I actually just went negative on my average position, which is crazy. Calls though, they're so expensive. Oh, implied volatility is almost 400%. Oh my god. That's nasty. That's like nasty. Must cancel by the NSCC. Okay, what is it called? People, NSCC rule 801. April 12th. Is this it? It's got to be this one. 801. Where's the conclusion? The nature of the proposed change. The purpose of this proposed rule change is to establish new membership categories and requirements for sponsoring members and sponsored members, whereby existing members would be permitted to sponsor certain institutional firms into membership, establish a new membership category and requirements for agent clearing members, whereby existing members would be permitted to submit on behalf of their customers transactions to NSCC for innovation, establish the SFT clearing service to make central clearing available at NSCC for SFTs, and make other amendments and clarifications to the rules as described in greater detail below. Only speaking securities lending transactions where parties exchange equity securities against cash and simultaneously agree to exchange the same securities in cash plus or minus a rate payment on a future date. In particular, the proposed where's the conclusion? I don't want to see all this. Dude, 177 pages? Yeah, you got me fucked up, dude. I ain't reading Mm. Conclusion, sir. In its filing with the Commission, the clearing agency includes statements concerning the purpose of basis for advance notice and discuss any comments. That's not important. Liquidity drain risk mitigation. Liquidity risk may also arise if the context of a stressed market scenario, borrowers or lenders concerned about their counterparty's credit worthiness seek to unwind their securities lending transactions and obtain the return of their cash, collateral, or securities. This occurred at a certain extent in 2008 when borrowers began demanding to return borrowed securities in exchange for cash collateral the borrowers had posted to institutional firm lenders. These runs may require institutional firm lenders to quickly sell off securities that are subject of their cash reinvestments to raise cash to return to the borrowers, thereby also creating a potential fire sale conditions with respect to the reinvestment securities as described above. Similarity, borrowers may need to purchase or reborrow securities in stressed market conditions, leading to potentially significant losses. NSCC believes that having SFTs to be centrally cleared by NSCC would lower the risk of a liquidity drain in a stress scenario. Specifically, NSCC believes that having it clear SFT activity would provide confidence to borrowers and lenders that they will receive back their cash or securities and thereby lessen parties' inclination to rush to unwind their transactions in a stressed market scenario. When evaluating the opportunity to expand its clearing offerings to mass, extended discussions with numerous market participants, including agent lenders, brokers, institutional firms, and critical third parties such as matching service providers and books and record service providers. NSCC also organized several industry working groups to discuss the possibility of clearing SFTs. Each constituency has a unique perspective on the proposed SFT clearing service, capturing their differing viewpoints in the design. NSCC has sought to ensure that the proposed SFT clearing service would reflect their needs and facilitate industry adoption of the proposed SFT clearing service. I think that was the important part. I think, now I got more context to this. Where's it at again? I don't think it's like as important as you would think it is. Like this is not really pertaining to like one security. Like this looks like it would be like a market-wide event, and they already do things like this anyways. Like it's not substantially different from what they already do. Unless I am understanding this wrong, but like it says, specifically, NSCC believes that having it clear SFT activity would provide confidence to borrowers and lenders that they will receive back their cash or securities and thereby lessen parties' inclination to rush to unwind their transactions in a stressed market scenario. The reality there is that nothing is guaranteed. What? You're going to I'll read into this more, but what? How do you guarantee that? The only way to guarantee that is to put up more collateral like they already do. Like a margin call is a margin call. This would have very little impact to anything when it comes down to it. Yeah, it's a long read. Yeah. NVIDIA. What? NVIDIA's tomorrow? Am I tripping, or do they not put this on here? Are you tripping, or am I tripping? Oh. we're both tripping. No, it says May 25th. That would be wild. Nvidia is a key one. What time is the Fed tomorrow? Well, they are twice. You have Fed Jerome Powell at about 8 in the morning, and then you have him again at about 11 in the morning as well. That's Eastern Standard Time. But by 8 o'clock in the morning, I mean, you're gonna know, how the markets are feeling about things. What is going on? We're just chilling. We're talking trades. NSCC trying to kick the can down the road, I guess. I mean, this doesn't look any different from what actually happens, right? Like, a bank or somebody else does not put their money into something unless they know they can get paid back. Think about how hard it is to get a mortgage. They will only give you a mortgage if the property is secured, if there is no chance of them losing money unless the markets came down in just a substantial way. And in that scenario, like, they make sure they still wouldn't lose money. Like, same thing there. If you take out $1 billion short position, let's say, in your portfolio, and that position goes against you, say half of it was margin, right? Once that position drops 30, 40, 50%, you're going to get a margin call. You're going to need to put that collateral up, or you got to get out of that position. There's no other way around it. This is not going to change that fact. Even though there is like 175 pages of this I did not read, I can sit here and damn well guarantee that. I mean, nobody's going to just lend out money not knowing if they'll get paid back. That's not how financial markets work. Nobody lends out money without affirming they will get it back unless you get 20-30% interest rates, and at that point you're investing in junk bonds and you expect to lose your money. Best case scenario, you make a lot of money. Any snap plays tomorrow? That's what I started to look at. But they are really they are so expensive. Like Snapchat, oh man. Like, Snapchat is substantially more expensive than like a Facebook put or a Netflix put was. Or calls for that matter. The implied volatility is like 400%. They're higher than AMC options, like double or triple the implied volatility. So they are very, very expensive, even expiring this Friday. Like, the markets are expecting a wild move, a stupidly big move. Hold on. We can calculate roughly the implied move the markets are pricing in to by taking the at the money. What is that? 299 plus well, I should do it like this. 3.70. Yeah, it looks like the markets are pricing in about a 21% move right now, if I did that correctly. So you are paying up for these options. So I don't necessarily want to run out there and buy a whole lot, but what I will do is play the direction, no matter if it's bullish or bearish. If it's bullish tomorrow, I might look at the $33 strikes, might buy 10 of those, might spend $2,000, or even go out to the 35s and buy 10, spend $1,700, try to make one or two free. If the market's bullish, if it's solid, depending on what the Fed says, that's going to be the key. If the Fed is not as negative as we think, you might see a stable rally tomorrow. If the Fed is saying a lot of bad statements, and even if the market's up, you got to be a lot a lot more careful because it's not going to be a stable rally, and especially what the bonds do, because the bonds right now, the bond yields are up, so that means the bonds continue to sell off yet again. Embattled hedge fund Melvin Capital weighs unwinding current fund to start new ones, sources say. Key points: Melvin Capital, the embattled hedge fund run by its once high-flying founder Gabe Plotkin, has been discussing a novel plan with its investors under which the firm would return their capital, giving them the right to reinvest that capital in what essentially would be a new fund run by Plotkin. Plotkin, according to people familiar with his plans, has committed to keeping his new fund at or below $5 billion in capital and returning to a focus on shorting stocks. Oh my God, dude. If you fail once, try again, baby. This is the funniest thing I heard in a long time. This is the funniest thing I heard in a long time, dude. What the fuck? What is going on with Melvin Capital? Have they lost their marbles? Just all of them? Like, you want to short the markets now? Like, I get you, bro, but these stocks are getting slammed. There's only so much left. Jeez. Hey, Ty, I watched most of your videos you put up since late last year. I wish I discovered you sooner. What are your plans after the MOS? Do you have any stocks in mind or other markets even? I do. I do own other stocks. You know, don't get me wrong. I'm a long-term investor first and a trader second. You have to understand the long-term potential and just buying and holding stocks. It's unrivaled. Like, you can hit a trade, cool, but unless that's your last trade and you're getting out the markets, it really does no good in that regard. AMC is a very big position though that I do have. You know what I own right now, not necessarily what I would buy at the same price as my average are. But, you know, I got Snapchat, I got Abify, what else I got? SoFi, DraftKings, MindMed as a random lotto stock. I got some Lucid, some GGPI, Polestar. What else do I have? I got a PayPal, Square. I'm pretty heavy on fintech. I believe fintech is going to do very well here in the next 5 to 10 years, especially Square, SoFi, and PayPal at these prices has a lot of room to recover. To see a 3x in the next 2 to 3 years would not surprise me on PayPal, and that's a relatively safe stock. Relatively. It's their new way to scare people out of their positions. Hopefully people ready over it and don't believe it, read over it and don't believe it. Yeah, I mean, I don't see anything too crazy there. I'm getting married. Bro, can I come to the wedding? I've been to one wedding in my life, and it was the best thing ever. I was dancing out there. Yeah, it was fun. It was fun. Won't Tesla sell off tomorrow at open? Once people take profits, and Netflix probably will continue down, bringing down the whole market and SPY. The main key will be the Fed at 8 in the morning. Now, Netflix earnings were not bad. They were actually really, really good. But it wasn't like knock your socks off, wow, this company, I need to flood into it right now. But it also wasn't like, hey, we got to be worried about Tesla. We got to get out now. It's way too overvalued, right? You didn't get either which direction too much. Like they were really good. They beat all expectations for revenue, for profits, EPS, all of that was all a beat. You know, they did say that they expect less vehicles delivered in Q2 or relatively the same amount as now. Elon talked a big game about robo-taxis, so not too many people actually believe him on that. So it was kind of neutral, if anything. Like, it was pretty neutral. So surprisingly, I expected a bigger move than that. But we did not get it. But I think there will be a big move. Like, if I were to guess here, the stock was up like 5.5% in after hours. It was pretty flat on the day, actually, considering the almost 5% drop we've seen in regular trading. So if tomorrow's bullish, then the stock could run 10-15% to the upside. Like, there isn't a reason to sell it. Not at all. Tesla, no profits to take. I beg to differ. Oh, there is, but people usually take profits before earnings, believe it or not. People usually, like, if you're looking at it on a risk to reward basis and you have profits, especially after what happened with Netflix, you would want to take profits if you were worried about Tesla before earnings come out. Because what's the worst case scenario? Earnings come out and maybe you lost out on some additional profits, but you still took profits and you played it safe. Or you could let earnings, come and go and see what they do, but potentially lose 35%, like Netflix. So usually a lot of the times profits get taken before earnings, and then once earnings are confirmed to be good or bad, that's where you see the final position, right? Like with Tesla, that's probably why we were down 5%. Tesla usually doesn't go down 5%. Yeah. Dang, it got clapped all day. Yeah, it got clapped. Those puts printed. I mean, 450% on a day on some next week puts. That's insane. That's it. Like, the Tesla premium went nuts on both sides. I mean, the calls did well and the puts did well. So there's gonna be a big IV crush tomorrow. That's why I do like to make positions free, and I mean that's what I did today, but. I usually do strangle earnings. Yeah, the only problem with strangles is if it pulls a Tesla and it doesn't move. Like, that's where you get clapped really bad on strangles. The implied move for Tesla was about 6%. We didn't get that. We got like 5.5% in after hours. So technically, if you bought it at the money, call and put, you still lost money on Tesla earnings because they did not move enough in one direction or the other. But usually it can be a pretty good strategy. Usually. Sorry, I'm late. AMC didn't rally on this news. It's going to be a long road. This squeeze seems to be over. No, I don't think it's over. I think this is exactly what I have expected for a very long time. Like, I expected all of this. I've expected the markets to come down since November, earnings to slow down, people to freak out, AMC to go down over the longer term course. You can get rallies here and there, like we just seen the rally from 13 to 35. That can happen. But the overall trend of the markets, this is really just a bear market rally. And that's what you need to see for shorts to be forced to cover. There's only one reason why shorts ever cover on a short position, is because they are forced to. Everybody knows stocks go up and they come back down. Everybody knows that. A stock does not go up and stay up unless it is Tesla. That's it. Tesla never came back down in a substantial way. So most stocks, they go up, they come down, especially squeeze stocks. You don't cover on those kind of positions when you take massive losses unless you are forced to. That's why not very many people covered back in June. It was mostly a lot of retail investors that pushed up the stock and option traders, right? So the only thing that forces them is when liquidity is dried up, when you don't have capital to service your margin call. Like, if you guys have margin and you get a margin call, they don't care what you do. They don't care if you put money in your account. If you don't, they will forcefully sell your position and pay themselves back, and you will keep whatever's left. They don't care. They're guaranteed to get their money back. Same thing with hedge funds, institutions, dealing with banks, brokers. So that's the only difference. When stocks go down, it's less collateral to put on those positions. Hedge funds get a little bit better special treatment there. You can't really pick and choose what stocks you want to put up as collateral, but hedge funds, they can do stuff like that. They can put up bonds as collateral too. I mean, you can put up a lot as collateral. But bond markets are going down. Bond prices going down. Stocks getting haircuts. So it's definitely less money out there. Capital has become more expensive. So we're actually getting more bullish, believe it or not. But it'll take time, and I know I sound crazy now, but it's market dynamics. It's what's the best way to say it? I guess it's what has to happen. Like, if you just think about 08, 09, like, there was not retail traders in there, squeezing shorts. Maybe a couple here and there, but it was a lot different to trade stocks back then even. Like, it was not mainstream like it is now. But there was still massive short squeezes. Why is that? Well, because everybody was trying to get their hands on very little shares. There was a catalyst. There was a reason. And it was the bottom of the markets in 08. Nobody had money. Everybody just lost everything in the markets. And then you get your short position going against you. You don't have the money to service a margin call. That's how whole portfolios got blown up. A German billionaire killed himself because of that short squeeze. Like, that's the difference between the last year and what we're heading into now. I will be doing Snap strangles tomorrow as well. Yeah, it looks like Snap is pricing in like 21%, which is not surprising considering they moved 60% last time. You just gotta be pretty careful with it. Like, the damn, oh my god. That's terrible. That's crazy. Like, a put 12% break even on the downside, factoring in that additional just premium you're gonna pay overall. Yeah, they're pricing a lot. 12% to break even on the put side, 10% on the call side. So that means if Snapchat moved 5%, 7%, or even 10%, you're clapped. Like, you need to see a 20% move to make money on these. But I do want to, somebody asked if I was going to get calls. You said you'll play Snap via calls. I'll play whatever direction it is. I don't want to gamble on them, especially because I own like a decent amount. But I will trade it bigger, 5 to 10 contracts, and try to make 1, 2, 3 or however many I can free, and then I'll just hold those as profits. I'll likely go out to April 29th though, because even like the case with Tesla, like I had those $800 puts, right? They hit big, 128 into 6, almost 700 in a day. Now I sold the 700, so I collected profits, but I specifically targeted next week because even if I was wrong and Tesla went up like it did, those contracts will still have value. Like, if I had done that on contracts that expired this Friday, those contracts would be worth like $10 tomorrow. Considering they're next week, they'll probably be worth 100 or 2 still. So you always want to go out a little bit when it comes to that. Not financial advice, but Costco is the future, baby. I've never been to a Costco. Netflix sucks now. A bunch of reality shows and international movies. Yeah, I'm not a fan of the reality shows. Some people are, though. You should see my mom on Bachelor. Oh my gosh. It's funny. It's funny. What's your thoughts about playing $3 out the money strangle on Snap? It's just a tough one because it's pricing so much. I've never seen Snapchat price this much, and they usually price a lot. So what's $3 out the money? Just call it 34, right? You're gonna spend let's just call it 500 roughly, right? $3 put side. Let's go to 28. Yeah, 200. Call side is like 200 as well. Let's call it 450. You spend 450 on these. Well, you need to see the stock either go to what's 450? About $39 on the call side to break even, or about $5 past 28 to break even, because you can factor in, I guess, some of the extra time premium if you do them for like April 29th, especially if you do them for Friday. You need to see like a couple dollars above whatever direction it is, because as you'll win on one, especially if they're expiring Friday. You might win on one, you're gonna totally lose on the other one. Now, factoring what you pay for both of them, that's how I like to do it, and the way that I like to look at it. Then you would need to see like a $4-ish move, maybe a $3 move, factoring in time premium, like I said, if you do April 29th. So in that case, you would probably need to see the stock at least go to like $37, $38, $39 to make money on the call side. Put side, you're going to at least need to see like 27, 26 to make money on them. So it's a big move. What's 26-ish dollars on the put side to break even? That's like 21%. I personally wouldn't. Not my favorite outlook here, but I don't know. They can be good. But probably a better way to play it is Facebook calls or puts, right? If I were going to do that, if I wanted to play Snapchat and do a strangle and not make anything free, just totally like gamble it and try to hit the trade, I would probably do it on Facebook, because Snapchat and Facebook, like Facebook had bad earnings last time and Snapchat got clapped. If Snapchat has good earnings this time, Facebook will likely go up. If Snapchat has bad earnings, Facebook will likely go down, right? Because they had a really big correlation last time. Like what Facebook dropped, like 30-40%, and Snapchat fell like 26%. So you can see something similar there. That's probably the way that I would trade it. And buying the contracts now, not financial advice, but if you do a strangle and you go, I would go to at least May 6th, just because once earnings report on Wednesday, that's going to be April 27th. You're going to have 2 days left. If you're wrong in that direction, you're going to get clapped. But if you have an extra week, you'll at least have some money left. So that's what I really like to do, is get at least an extra week after earnings if I'm doing some of those. But yeah, let's look at Facebook, because that's actually not a bad idea. Like, if Snapchat has good earnings, it drives Facebook up, then you might be able to make some money, get out of your position on the call side, or at least make it free, debit spread it, ghetto spread it, do whatever you want to do on that aspect, and then be able to play another downside move, because that will come. Or in the case of Tesla today, even the calls went up in value. Like, the calls went up. Crazy. Because that IV that hits on the day of earnings. 809, bro, you need to stop the clickbait. You actually got good info. I appreciate it. Lucid calls might. Yeah, that's what I was thinking. Lucid. Their guidance is the only thing that's like, man. Maybe they sandbagged it though. Maybe they did sand. Are we back? Jesus Christ, what the hell was that? Are we back? Jeez. Man, I was getting into it. This is some bullshit. They clapped us. Oh, man. Oh. Jeez. Yeah, that was a whole lesson. That was the whole lesson. Well, I'll give you guys a brief rundown. Jesus Christ. I don't know where I left off. Said it's been like 5 minutes. Man, I've talked a lot in the last 5 minutes. Snapchat. That's what we were talking about. The strangle. I think we got that far. Rewind 15 minutes. Oh my gosh. Oh my. Don't tell me that. Just go back 10 minutes. Shit. Well, we talked about. Did you guys hear the Snapchat strangle? The whole. Oh, sandbag. Oh my God! All the way back to Lucid sandbag. Jesus Christ. Damn. Okay. Well. Yeah. Basically. Maybe they sandbag it. Maybe not. Dude, we could tell you were going hard as fuck. Oh, thank you. Yeah, $199 for the effort. I'll take it. I will take it. Damn it. So, yeah, basically what I was saying with the Lucid sandbag is maybe they can outperform very well this time around. But I was going over the Snapchat strangle. And it's very expensive. So with Facebook, they're going to be directly impacted to Snapchat. Just like, I don't know if you guys heard this part. I really don't know because I talk a lot. But basically, like we seen with last time, Facebook dropped like 40%, 35-ish, 40% last time. Snapchat also dropped 26%. Now, if Snapchat has good earnings tomorrow, Facebook will likely have good earnings. Vice versa. Snapchat has bad earnings, Facebook is also going to have bad earnings. But Facebook is really an interesting one to me because Facebook is at that point where it's like there is a growth concern. Yes, there is a growth concern. But they could come back from here in a weird sense. It's not subscription based, it's advertisement based. So there is a big difference there. And what the markets want to see out of Facebook is hopefully them not losing as much money and hopefully gaining some subscribers. If they lose subscribers, you're going to see another bit of this fear. But Facebook doesn't report until next Wednesday. So what we seen last time around was Facebook reported first, affected Snapchat, and then Snapchat reported after that. So I think you could actually get a better strangle on Facebook. It's a lot cheaper. I don't know if you guys seen, but the break evens on Snapchat on both sides it's so expensive. Like, if you want to go out to April 29th, you need like a $4 or $5 move in the money to break even. You're going to need to see like a 20% move to even break even on a strangle because they are so expensive. You're buying a $34 call for next week, $227. Go $4, $3 out the money to the put side. It's going to be another, $200 some dollars. So you're looking at like $500. You're gonna need to see like at least a $3.50, $4 move in the money. So you're gonna need to see this thing go to like 39 or drop down to like 25 to make money. I'm not convinced it'll do either one of those. But Facebook, on the other hand, will be affected. Yes, maybe if you do the strangle, not financial advice, you could actually make money possibly before earnings based off of Snapchat's earnings, either way, to the call or the put side, make that side free, and then hold the other side for Facebook earnings. Like if we do go out to next week or even May 6th. Let's go ahead and look at this. So May 6th, you get 2 more full weeks plus the next 2 days on these contracts. A 230 call is only $300, similar to a Snapchat option that expires next week that is 20% out, 20% to break even. So this is 15% to break even. Now, Facebook could rally theoretically to say 250. If some of those growth concerns slow down, maybe they announce a different avenue. Maybe they're not so crazy about the Metaverse. I'm not convinced of that. I think they're going to double down on the Metaverse before they cancel those plans. So I personally think it's going to be bad, but I could easily see Facebook rebounding to 230, 250 upon earnings if things are really good, if that concern goes away. Would I bet a lot of money on one direction? No. So, 15% to break even, that's not bad. If Snapchat has good or bad earnings and affects Facebook the way that they affected each other last time, and it's only 15% out the money for 2 full weeks and 2 days, you could see a 5 to 7% move based off of Snapchat earnings tomorrow. So you could, get a pretty good move. Like, it would not surprise me if Snapchat earnings are good to see Facebook go back to 215, 220 before they report earnings. This contract's gonna print by then. You're gonna get the IV heading into earnings, especially next week. And that could hit pretty good. Or on the put side as well. I was going over the chart with you guys, but if Facebook earnings are bad, this thing could easily drop to 130, right? If you look at Netflix comparatively to Snapchat, and they're kind of in the same boat, right? The growth fears are here for Netflix, and if Facebook earnings are bad, they're going to be in the same boat. Netflix, they're down to their 2018 lows, 226. Like, they're under their, they're at 223 now, so they're under their 2018 lows. Their 2018 low was 231. So they're like, what, $7 under their 2018 low? Like, they've not been this low in a very, very, very long time. Now, on the other hand, if you look at Facebook, like, they still have a decent amount of meat on the bone, all things considered, relative to Netflix. Like, 2018 lows for Facebook was 123. So if earnings are bad, this thing could go really south really, really quick. If it's good, it could also rebound very quickly. So, I think it's a better risk to reward ratio with the same amount of money playing Facebook instead of Snapchat. But at the same time, if you can play the directional move tomorrow, if it's bullish, get some contracts, sell out, keep one for free, all you risk is profits. That's the way that I like to play this stuff, especially when the IV, the premium, is so bad. And like I was saying during my 5-10 minute rant that nobody heard, even PayPal is at their 2020 lows. Facebook's 2020 low was 137. Like, when you look at it like that, it's went down a lot. But if there is these real fears still coming out, then you could get double clapped. Yeah, so there's a lot on the line for Facebook, and I really do like the 15% break even on the call and the put side. Like, theoretically, if Snapchat earnings are good, like I said, you could go to 215, 220 before we report earnings. And those things will do very well. Or you could drop another $15, $20 before earnings, and the puts would do well. Either way, I think there's going to be one move or another, one direction or the other. So I actually like that idea myself. I actually really like that idea. Netflix is the new Blockbuster. Ooh. Facebook is the new AOL. I'm picking up what you're putting down, and I kind of like it. Yeah. I think you're onto something. Like, Tesla, for an example, it has a 200 price to earnings ratio because they actually impress investors. Like, it's super overvalued on a book value, but it's like if you're producing 50% growth and forecasting that for multiple years, then people are willing to pay that. But if you're a Netflix or Facebook and you're seeing negative growth, people are not willing to pay for that at all. Not at all. Especially for those businesses too that burn a lot of money. Making movies is not cheap. It's one of the hardest things to do for businesses. Any business for that matter. And Facebook trying to do something totally different, unproven, 5 to 7 years to break even on that. Investors don't want that. If you got to put 20, 30, 40, 50 billion into it in the next coming years, no bueno. Not good. Not good. So that's pretty interesting. Melvin Capital. Gotta love them. Gotta love them. They're going to focus on shorts again. These fuckers, dude. I've lived through the rise and fall of them, and it's looking a lot like those times for them both. It really is. It really is. Roblox might be the move. Yeah, they're getting like sued or something along those lines for like deceiving bad advertisement or something along those lines. Something. Is being punished for making that shitty movie Bright. You didn't like that one? I like that one. I actually think Don't Look Up is like a great concept, and I like the movie, but it had a poor design, a poor production to it. Like, at one point in the movie, I don't know if anybody else caught this, it completely lags for a solid second, maybe a half second. The guy's talking towards the end when they when like the asteroid blows them up and they're having the dinner. The guy is talking and it's a picture. It's just a straight face. I don't know if anybody else caught that, but I like the movie, but poor production on that aspect. What's oil futures? Up 1%, which, yeah, this is a very unstable rally, and we won't really get a stable move more or less until we get the Fed after around 11. But you're going to see a very volatile market tomorrow. Do not underestimate that at all. Just because we're green right now, things could turn around, or you're basically looking at it over 1% up or down day tomorrow. Basically, long story short, with the Fed involved, it's always going to be big. Lucid next earnings 512. Yeah, Lucid. Lucid does have a high valuation as well, so they're also in the boat of they have a lot to prove, but oil is at $103.28. That's what the futures indicate right now. And usually if the futures are green, you want to see oil down and the US 10 years down as well. That's a more stable rally, I guess, call it. But please make your videos able to go back if you don't get in at start. Oh yeah, I will definitely do that. I meant to do that actually today. That's my fault. I'm gonna go ahead and wrap it up. We did some encore today. Hopefully went over some trade ideas with you guys. None of that is a recommendation. It goes without saying. If you trade options, you can hit big trades, and you can also lose everything. So just be careful on that. But yeah, Snapchat, that's going to be the main earnings tomorrow. Tesla, continuation, that could be really good. But the Fed, that's the main key. The Fed at 8 in the morning, and then the Fed at 11. And by the Fed, I mean Fed Jerome Powell. So the top guy, he's going to let us know what to expect on that May meeting. Exactly 1 week, 6 days, 15 hours, and 44 minutes away. And I said that just because I like to say it. It's actually 31 minutes away now. Oddly specific there. So, yep, thank you guys for tuning in. Appreciate all you guys. RWK, William McDonald, I like the name there. Super Show, Seydou Diallo. Thank you guys for tuning in. Appreciate all you guys. Have a great night.